Welcome to Talk Tickers, where we break down the earnings calls that matter. Today, we're diving into MKS Instruments Q3 2025 results. And let me tell you, this was a big one. Okay, so let's jump right in. The market's reaction? Absolutely huge. The stock just soared, up nearly 11% to a new 52-week high. And get this, it was on almost double the average volume. So what on earth did investors hear that got them so excited? Well, it all boils down to this. A massive beat. We're talking top line, bottom line. MKS didn't just squeak by. They blew past their own guidance and what analysts were expecting. Let's put some numbers to that. Revenue came in at $988 million. That's a good $24 million more than expected. Non-GAAP earnings per share? $1.93, which is about a dime better than consensus. But you know the number that really got my attention was the free cash flow. $147 million. That shows you the business is just humming along, generating real cash.
So, was this just a good quarter? Nope. The story here is so much bigger than that. This isn't just some regular industry upswing. The real engine driving this whole thing? It's all about AI.
You know, the CEO, John Lee, he basically said it himself. All those big investments they made in advanced electronics, well, they're paying off in a huge way right now because they're smack dab in the middle of the AI boom. This wasn't luck, folks. This was a plan, and wow, is it working.
Okay, this right here is the core of the whole story. Think of it like a layer cake for AI. A few years back, these complex circuit boards have maybe 20 layers. Now, we're at 40. And here's the kicker. Management says their customers are already talking about boards with 80 or more layers. Every single one of those layers needs MKS's high-tech chemistry and gear. That's not just a trend, that's a massive long-term tailwind for the business.
All right, so the AI story is fantastic, right? But there's another piece to this puzzle that's just as important. MKS is getting its financial house in order. They're showing some serious discipline, paying down debt, and that makes the whole company a much safer bet for investors. So what does that look like in practice? Well, their net leverage ratio is now down to 3.9 times. Now, that might sound technical, but what it means is they're making real, solid progress. Their big goal is to get that down to 2.5 times, and they are well on their way. And look at this. They're putting their money where their mouth is. They just made another voluntary debt payment, $100 million in October alone. That brings the total for the year up to a whopping $400 million. And where's that cash coming from? Straight from their super strong operations. And on top of all that, they're handling the whole tariff situation really well. You know, that complex global trade stuff? They basically said, yeah, we've got a plan, and starting next quarter, they expect to completely neutralize the impact on their profits. For investors, that just removes a big question mark from the table. Okay, so that was Q3. What about the road ahead? Let's talk guidance. Is this momentum going to last? The short answer? Oh yeah. The outlook is strong. They're guiding for about $990 million in revenue for Q4. But check out the earnings per share, around $2.27. That tells you Q3 wasn't a fluke. This is the new normal.
And this is what makes the MKS story so interesting right now. The rest of the semiconductor industry, they're kind of waiting around for a big recovery in 2026. But MKS, they're not waiting. Thanks to AI and all that advanced packaging, they're growing right now. They're ahead of the curve.
So when you step back and look at the whole picture, this quarter feels like a real turning point. It's like the whole story around this company has just shifted. So the million-dollar question. What's the call on MKSI from here?
All right, here's our take. We're calling this an outperform. The entire narrative has changed. It's no longer that company with a lot of debt from an acquisition. Now it's a key supplier for the AI revolution that's fixing its balance sheet. We're looking for them to post solid, maybe even slightly better results next quarter. That should let the stock catch its breath after this big run-up, before it starts its next leg higher. And here's the key takeaway. We think the market is just starting to wake up to this new MKS story. There's more room to run.
This is not financial advice.